Good evening. This is Brian Shannon from Alpha Trends Blogspot. It's Monday, August 28th, and I've already wrapped up what I thought of the market. So let's go right ahead and just take a look at some stocks. On the screen right now, I've got Integrated Device Technology, symbol IDTI, Indian Delta Tom Indian. And on here, you can see the stock is in a real nice uptrend here, making this series of higher highs and higher lows recently. If you look at the weekly time frame, there's definitely some room here to the upside. We've taken out these highs right here from April of 2003, and I think the stock can make it up to about $18.25 from the current levels. If we look at a shorter term time frame, the way I'd like to play the stock would be buy it on some strength above $17.09. That's this high right over here. The recent highs are 17.09. So if I can get above 17.09, I'd like to purchase the stock, put my stop at $18.68, a little bit below um, I'm sorry, $16.86, which is a little bit below this 5-day moving average and the rest of the short-term moving averages as well. So we're looking to buy the stock above 17.09, stop at 16.86 with a target of 18.25. All in all, it gives us a risk of about 23 cents for a potential reward of about $1.10. Next up, we've got symbol DLTR. This is Delta Larry Tom Roger, and this is Dollar Tree Stores. You can see here on the 10-minute time frame that it looks like the buyers have regained control of the short-term trend in here today by breaking past this little level of recent resistance. It's back above that 5-day moving average as well. When we look at a daily time frame, you can see that it's found support initially at the 10, now at the 20-day moving average. Weekly time frame shows a nice pattern. What we're going to look for is a retest of these recent highs up here near $30 a share. So the way I'd like to see this one play out tomorrow would be, first of all, a slight pullback to $28.50. If it gets back to $28.50, I want to buy it above $28.65 and put our stop at $28.21. So we'd be risking 44 cents, and our target being at $30 a share would give us a price objective that's about $1.35 away, risk reward of about 1 to 3. Next up, we've got a company called Rudolph Technologies, symbol RTEC. And this stock had a real nice move with volume. Let's see, that's not what I meant to do. Change my scaling. These real tick charts, by the way, highly customizable. So make sure you take a look at realtick.com. But we've got this big volume occurring on the way up, followed by low volume periods of consolidation, which is a very bullish pattern that we look for. So based on that, looking at a 10-minute time frame, you can see that the stock got a little bit ahead of itself here late in the afternoon, I think. So I'd like to see the stock pull back slightly down to $17.25. If it gets below 17.20, down to 17.25, I'd then like to buy the stock as it breaks out past the 5-day moving average at 17.45. Our stop will then go at $17.18, about right here. So our risk altogether is about 27 cents. As far as the target goes, I think we can see a test of the recent, near these recent highs, up near 19 to $19.25. Let's say $19. That would give us $1.55 of upside compared to our 27-cent theoretical risk based on the stop that I'm suggesting. Halliburton, symbol HAL. We've looked at this stock a few times, haven't really gotten in it yet. This prior support has been acting as resistance. We've got this declining 50-day moving average as well. We've got the 10 about to cross back down through the 20-day moving average. Looking at the weekly time frame, it looks like the stock's put on a nice big top and looking like it's ready for the other shoe to drop here. Now the stock got a little bit ahead of itself on the downside here, so what I'd like to see is a rally up to $33.40 and then short it below $33.25. So only short it below $33.25 if we get a rally, if we see the stock above $33.40 tomorrow. Our stop would then go at $33.71, giving us a theoretical risk on this one of about 46 cents. And as far as a downside target goes, I think we can see it down near about 31.5. That will give us a price objective of about $1.75 away for our 40-cent risk. That will give us a risk-reward ratio of about 1 to 4. Lastly, we're going to look at Intuitive Surgical once again. And we've been in this one and made money in it. It's breaking down nicely. All the moving averages are heading lower on this weekly time frame, including the 40-week or 200-day moving average. And here we can see that 200-day moving average right there. But the stock is just kind of hanging on a cliff here. It's making these series of lower highs, and it keeps pounding at this support down in here. Now, the way I'd like to see this stock unfold tomorrow would be a short sale below this level here. This is $92.60. If the stock drops down below $92.60, I think that it could see a minimum of $90.50. So about $2 of risk, and I think $2 of potential reward. Your stop ought to go about 90 cents away. Now that doesn't sound like a great risk reward, 1 to about 2.25 or so, but that 90.5 level I think is conservative. If the sellers really lean into this thing and it breaks down through there, we could see the stock just cave in. So maybe you want to trade a little bit smaller share size because the initial price target is only at about 90.5 compared to a 90-cent risk. But I think it has a good chance of failing miserably. I just want to be conservative with that price target right in here. So that's going to wrap it up for trading ideas for Tuesday. Thanks again, and be sure to visit back.